Hi, and welcome to Random Rogers Big Picture special Memorial Day weekend edition. Memorial Day is not one of my favorite holidays, and it is the first or second busiest weekend up here on the mountain. We've got our annual meeting for the fire department, a couple of barbecues to go to. I've got in-laws in town. We've got to do something on Monday. Very busy weekend, much busier than normal, but there you go. The topic on the agenda is about stock picking versus fund picking for foreign investing. I had a couple of good comments come in, kind of broaching on the subject. Someone saying they weren't real comfortable with picking stocks in the foreign arena. Someone else noting that why they like a particular broad-based emerging market fund for what they do. Okay, well, couple of things to talk about in terms of a starting point. And this is not going to be telling you, oh, such and such a stock is something you should own or anything like that, but just kind of more about a starting point to go about how to think about the process of foreign investing. And some of you, are probably won't be open to it, and that's too bad. But anyway, be that as it may, here we go. In picking an individual stock or deciding between an individual stock and some sort of investment product, you kind of need to think about what it is that you're actually trying to do. The first thing, people express fear because they don't know if the numbers are real with a particular stock. The accounting's different, all of that. Reporting is different. Yes, it is. The first thing I would tell anybody is to not assume fraud. This has nothing to do with risk or volatility of a stock, but when people start to talk about numbers being fishy, the number of companies that turn out to have perpetuated fraud is statistically insignificant. And if you weight the portfolio intelligently such that you have at most, in my case, 3 or 4%, and sometimes stuff grows into 4 or 5% or maybe a little bit larger. But if you limit the weighting and you get the one stock out of a bazillion that turns out to be a fraud, well, you're going to be bummed out, but you're not going to be damaged if you have a small weighting, and that's kind of the important thing. So don't start with, is this a fraud? Because it isn't. They never are. Statistically speaking, they never are. Okay, next thing. Why are you investing in foreign? Are you trying to add value to your portfolio, which is, if you're watching this, probably U.S. based, and so you're trying to add value versus some domestic benchmark, which is one thing, or you're trying to add value against that foreign market? Are you trying to beat that foreign market? And what the reason for asking that question is, when I buy foreign stocks for clients, the purpose is to try to add value to my U.S.-based client's portfolio. So I'm not necessarily trying to outperform a particular market. I'm trying to add value. And the point here is that if you look under the hood at most of the single country ETFs, and I'll give you a couple of examples with some emerging or close to emerging markets, if you look under the hood and you look at the 1 or 2 or 3 largest holdings of that ETF, single country ETF, you'll see that it correlates very closely with that single country ETF. I looked at PetroChina and FXI. No interest in either name. You take a look, you'll see that over time, most of the time, they have a very close correlation. Not a tremendous amount of difference, except you get a much bigger yield with PTR. Okay. I looked at Brazil, EWZ, and Petrobras. Again, the correlation is very tight. PBR dominates between that and its preferred issue, dominates EWZ. I forget the exact proportion, but it might be something to 40% of the fund in PBR and PBR preferred. So you're already making a big bet on PBR if you're buying EWZ. Next up here, South Africa. The largest holding in South Africa is Sasol, which is kind of an interesting company that I have no position in. EZA is the ticker for the ETF, no position. tight correlation most of the time. If you take a look, you'll see a couple of pockets of time, small, short pockets, where the stock has lagged the fund. And so looking over a period of several years, it looks like the stock has lagged, but really that narrows itself down to a couple of month periods, if you follow the way I worded that. iShares Korea and POSCO, iShares Taiwan and Taiwan Semiconductor. I think those are the only emerging market kinds that I looked at. So really, if you're just trying to capture China, using that as an example where I've got no position, PTR most of the time is going to capture China. It's been a long time since I've owned PTR. I swapped out of that a long time ago and into the Sinopec that I recently disposed of. It's going to capture most of the effect, and that's just how it works. And so when you talk about being, too afraid, it's just not going to hold up most of the time. Now, that being said, that's from a number standpoint, it's not going to hold up. Emotionally, if you just can't bring yourself to own an individual stock, I hear you, but I think it's worth spending some time and learning about this, and you'll see that the correlation between the big holdings in these things and the fund themselves is quite tight. Now, as far as proportion, I if you've been reading my site for a while, I talk about what sounds like very small amounts, 2 and 3% to China, 5%, I used to be 7% emerging markets, and someone left a comment a long time ago that maybe 7 or 8% is close to what of the entire world, that's about the market cap of emerging markets. 7% is about an equal weight. Right now I'm probably a little underweight, especially after having disposed of Sinopec. I think his first name might be Mark, but Mark Headley, Headley, the guy who manages the Matthews Asia funds, they've got a whole family of funds. He was on there. They were talking about China, and, he's got a vested interest in you investing in his part of the world, and he said, realistically, what's the most someone's going to have there? 5%? Hello. He makes the point. This is a guy who, wants you to, thinks everyone in the world, I would assume, that he thinks everyone who invests should have exposure there, and he's talking only about 5%. So when you take some of these people who contact me who've got 10% in China, 10% in India, making these huge bets, I'm not the only one who thinks those are huge numbers. But when you take a position of, and again, no position, not planning to have a position, but if you allocate 3% of your portfolio to Korea and you're deciding between the iShares product or POSCO, it's really not that different, except you're going to get a little more yield with the stock. Now, technically, you are assuming more risk. There's no question that you are taking more risk. If something real bad happens with POSCO, it's going to take down the fund with it, but obviously the stock would go down more. But at 3%, you're not being reckless about the risk that you take. Well, hopefully that makes sense, and enjoy your long weekend.